I mean, rains are welcome. Such heavy rains sometimes disrupt. Okay, is the market out of a disruption zone? I think that's the question that we pose to Anu Jain. She's president at 361 Wealth, joins in right now with her thoughts. Anu, great having you. As always, thanks for taking the time out. And I wonder, Anu, if to your mind, what's happened over the weekend since Thursday afternoon, and then the PM announcements and then subsequent meetings and that takeaways from the global pieces as well, have they changed the tone and texture of the market? It was a market that was in a slide downwards. Has that changed, and is this now a market which, if not a buy at current levels, remains a buy on dips?
Well, yes, I mean, the flavor with which you closed on Thursday looked like you were going to have a gap down on Monday. Had the PM not announced what he did on 15th, we would probably have opened another 150 points down. Given that also, if you look at the way market cruised yesterday to 25,000 plus, but couldn't stay there, and then kind of receded back from there, then fought back. I think we're still going through that resistance. But what I'm seeing is that a lot of people who want exit at about 25,000, whether it is people who are, international FIs, whether it's anybody else, it's giving them an exit. When the market gives people an exit, I think that's a very positive sign for the medium term. It may not be in the next week or 2 weeks that you may see a huge breakout, but I think the setup of consolidation is definitely happening for the next 8 to 10% to happen. It's a matter of time. Given what GST has kind of done, or what's expected out of it, I think maybe you may have some consumption which may get delayed by a quarter, but market will kind of discount it a quarter in advance, because that's what the market does. So I think personally, as you're saying that maybe it's a buy on dips, I don't know how much dips are now left. Maybe it's just going to consolidate in this level. And I expect the Bank Nifty to kind of take the lead. And once you see that moving out of that 26,000, 56,000 zone, probably the action on Nifty also would be there, because we know that 25,000 to 25,300, those 300 points are all resistance. Now, whether we take a week to consolidate and cross that or a month, it's in anybody's hands. But overall, I think, yes, the worst is over.
That's interesting. Anu, that's coming from you, that's really, really heartening. Now, I heard you say that you don't know when does the next 8 to 10% upside come. It's difficult to time it correctly, but you reckon it happens before Diwali?
Honestly, nobody can predict that, but it seems that I would be ready to take that call technically once it moves over 25,300. But I think I would rather just buy and sit rather than try to time it to that perfection. We think that banking financial seems to be the best place to play that. As I said, the Bank Nifty looks the most poised for it, NBFCs. So rather than try and time it that perfectly, I would just start accumulating, maybe not in one go, but over a period of time. And if there is a breakout, then you can, do a lumpier investment at that time.
Right. Anu, this is Harsh here. Trying to make this conversation more broader. We've seen some traction in auto. What was it looking like prior to the action that we've seen, and what's the expectation going forward?
So if you're making it broader, I'll make it even more broader. The fact remains that consumption has been on a weak note for quite some time, be it staples. We've seen, in fact, autos were one of the places which was not so badly hit. And given what we are seeing in the IT sector and what we're expecting in the IT sector, unless there's a turnaround there, be it real estate, be it auto, be it luxury goods, everything would take a hit. Now, while we've been negative in the side of the NDPMS we manage, on consumption from quite some time, on IT for some more time, we were really getting skeptical on autos and real estate as well. Given this boost to consumption, I think there is some comfort which comes there. But I think overall, would say that it's still a wait and watch. I would wait for 2 quarters to get that comfort. But yes, the first gainer from the consumption mode would be autos, which we've seen yesterday and today. And I think there could be some more momentum of about 5 to 6%. Post that 5 to 6% is where I'm saying that, I would be cautious as to whether demand kind of sets in after about a quarter, to the extent that we have already discounted the price moving ahead.
Okay, thank you so much, Anu. We're going to have to let you go. Thanks so much for coming in, speaking with us. So that's the broad brush with regard to how Anu Jain from 360 ONE is viewing this. The thought is that yes, the worst is over. BFSI, banking, financial services, insurance, likely one pocket where there's value, and then there's consumption, and within consumption, auto, but more of a wait and watch with regard to that one. So that's how that's the key takeaway. Let me quickly